Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 6, 2021. Let's look at TTM Squeeze. TTM Squeeze is an indicator that tells you when a stock is ready to roll and go out of its trading range quickly. So with that, let's jump in and look at a quick market update and look at the TTM Squeeze and take a look at stocks with a volume greater than 1 million and breaking out of its trading range. That's when we want to buy when their stock is stuck in the trading range for a long time and now they're trying to break out of the trading range. And we'll review a few charts and look at option trading ideas. So with that, let's jump in and get started. As you look through here on Friday, we had a down day in Dow Jones Industrial Average, Nasdaq, as well as S&P 500. One thing you can see from here is Nasdaq is down more. There's a rotation out of these growth names into recovery stocks. That's what's going on here. That's why Nasdaq down big time compared to Dow Jones as well as S&P 500. Also, as you can see here, we have more declining stocks than advancing stocks. We got to keep a close watch on this and go from there. So with that, let's jump in and get started. From a major news perspective, Federal Reserve is trying to speed its easy money policy and taper a little bit. So we got to watch out as Federal Reserve clamps down on the easy money. That could have some impact on the stock market. We'll watch it out, and they might stop the bond buying program or taper it down, which will basically increase the yield. So we got to be careful here, and that might cause some impact on the stock market. As the interest rate goes higher, that can have an effect on the stock market, like we had in back in 2018, where the stocks came down pretty quickly. And though futures are up nicely here, investors are rotating out of technology into recovery. We got some great technology stocks we can slowly leg into and slowly buy. No need to rush. And Bitcoin could be a good buy here at these levels here. We got great stocks we can buy in Bitcoin area. Given Bitcoin is losing big time here, 10,000 as you can see here. Great stocks like Marathon Digital, BT, right blockchain, all could be good idea to buy a little bit into this downfall. And looks like booster shorts can provide wide range of protection here. That's a good one. I think folks probably should slowly take some of these booster shots and protect themselves. And looks like we got a lot of people tested positive with the Omicron here. We got to be careful here. And Amazon is doing well despite of supply chain challenges because of their own containers, chartered ships, and whatnot. I think Amazon has got resources; they can see through this supply chain challenges. And then we have our president here, Joe Biden. He's signing the bill to prevent shutdown. That's a good thing here. And we got banner news here. DocuSign stock plunges 30%. Looks like not too many people are doing the mortgage over the DocuSign application. So we'll see how it goes. There may be good opportunity here slowly to buy DocuSign at these levels here. And then you got Marvel here. Jump 16% of the earnings beat. It's a great 5G play here. They're also trying to go into automotive area. And Alta Beauty is doing great here. They are doing well. CrowdStrike is a great cybersecurity play here. Stock fell down after earnings. I would be buyer of CrowdStrike here. Great stock. So with that, let's jump in here. Look at TTM Squeeze. So I will cover this quickly. You can look through my TTM Squeeze video to understand how to set up the chart and how to look at the TTM Squeeze in greater detail. At the high level, you got to look at TTM Squeeze indicator. As you see here, we got a TTM Squeeze indicator itself. That's the first chart here, lower chart. You got to watch for red dot toward the end here. So the moment you see a red dot, that tells you there is a tight compression of volatility. Bollinger Band is inside the Cultural channel. That's when you need to look for the first green dot here. As we see here, the first green dot after a series of red dots indicate that energy is ready to be released. So when that happens, you got to watch out the longer term C wave, the last chart here. So if the longer term C wave is above zero, which is this zero line here, it's above zero, as you can see here, that's the best squeeze. They will fire in the direction of the C wave here. As you can see here, in this case, after the first dot, stock started going higher. As the C wave is above zero, it started going higher. That's how you look at it. And I love to see the 1 day chart, 3 day chart, a weekly chart, as well as a monthly chart to really get good idea, so that way we can do some informed trade. And also from a wave perspective, these are called wave. There's a short term wave, there's a long term wave. In the short term wave, or A wave as you call it, the yellow bar is bullish, the red bar is bearish when they're above zero. And on the C wave here, the light blue is bullish, dark blue is bearish when they're above zero. When it's below zero, it's basically opposite. So this is the quick setup of the TTM squeeze. All you got to look for is a dot, red dot here. After the red dot here, you have to look for first green dot, and then look for the C wave, and see if the C wave is above zero. That's in a nutshell. We'll jump in here. So as you look through here, we'll look at our first screen and the only screen this time around. As the market is going down, it's very hard to find low volatility stocks. That's why you don't have too much screen this time around. We just have one screen. So we have volume greater than 1 million, highest volume on top, low RSI, and volatility, low IV rank. When we want to buy these options, you got to make sure IV rank is low. That's why this is very important. With the recent volatility in the stock market, it's hard to find low volatility stocks. That's why we have lower number of shares this time around, and these stocks are really breaking out of the trading range. Let's look at some of these here. So with that, we got a few stocks. Keep watching here. We got DVAX here, which is a COVID-19 type play here. A nice $1.5 billion market cap. Institutions are buying, insiders are selling, as you can see here. Nice sales growth and gross margin. Handily beats rule of 40, as you can see here. It's a green in the ticker sign. And as you scan through here, it's done great in 1 year, 5 year, and 6 months. It's got a daily squeeze here, so nice volume. So with that, this could be a good candidate here to look at a trading idea. And we got few more here. We got EDTK here, skillful craft, $1 stock here. Nice institution buying, as you can see here, and it's got nice net margin. Company is making money right now, and stock is really down, all along. There is no green shoots here. Nice volume is really more than double normal trading volume. And you got top ships again. It's really a dry ship type stock here, 94-cent stock here, and does not have too much good fundamentals, as you can see here, except for a nice gross margin here. And nice trading volume, 1.5 times normal volume. It's got a monthly squeeze here, which is could be a good one to look at. And we've got a few more, as you can see here. We got Camping World, a great stock here, nice sales growth and gross margin. And this is starting to go higher. This could be a good sign here. You could jump in here and buy this stock. Given there is a monthly squeeze, this stock going higher can go for a couple months here. That's what's going on here. I also like Nanometer. It's a great stock here. No fundamentals right now. It's early stage, but there's a monthly squeeze that tells you this stock can really go higher. We'll look at the chart to see where it will go, but this is a monthly squeeze. The trend can stay for a couple months. And as you can scan through, we got some great stocks. I love carparts.com here. It's a great one. Even Helcom Mining, it's a good one here. Nice 1 year sales change. And keep watching the stocks that are going higher in 1 day and 5 day. Those are already started to go higher. For example, ABCL, a low price stock here, trying to go higher. And we got Krispy Kreme already made its move here on a, it's got a 3-day chart here, and others like CYAD already made a nice move. I would stay away from it at this time and go after other candidates like MGI, CIG, and so on and so forth. So with that, what we'll do now is we'll look at few of these stocks here and go into a thinkorswim platform and see what's going on. So with that, let's jump into thinkorswim platform and go from there. So as you look through here from futures market, looks like we got a little bit small uptick here in S&P 500 futures. We might have a small bounce here. Nasdaq futures, as you can see here, is dropping. So it looks like money is rotating out of these technology stocks into other areas like recovery. So that's why technology is a little weaker here, weaker opening today. And then got Dow Jones Industrial Average. It's a positive opening, up almost 200 points here. And Russell 2000 is also positive opening. As you can see here, money is going out of technology and going into the industrials and low cap stocks, as you can see here, and also some into S&P 500. That's the rotation game. We got to be a little careful and buy quality stocks. So with that, what we'll do now is we'll look at TTM Squeeze here and go from there. All right, so let's look at TTM Squeeze right here. And first we'll look at DVAX. So I will look at this chart here to begin with, DVAX. All right, DVAX is a $13 stock, as you can see here. It's been dropping off of late. You see there are three red candles here. Let me make it a little big here. So right now stock is weak, as you see here. Implied wall is racing a little bit. It's trying to go above the historic volatility here, and chart is ugly, as you can see here in the DMI chart. Red line in top going higher, blue line is in the bottom going lower. That tells you right now chart is ugly, bearish, and right now it's completely bearish. And as you look through the volume average here, it's trying to drop off here. That tells you there are more sellers than buyers, and check-in money flow is going down, down, down. So chart is completely ugly, from a 1 day, 1 year chart. And now let's look at that TTM squeeze chart here. From a TTM squeeze chart perspective, as you see here, we got a squeeze here in the daily chart indicated by the red dot here. And when that's happening, shorter term A wave seems to be bullish here. As you can see here, in these yellow lines becoming shorter and shorter. That tells you it's a little bit bullish in the daily chart here, in the shorter term wave. And as you look through here, I mean, this is a squeeze chart, same story here. I think it's becoming a little, you see a red candle here. After becoming strong here for a while, there is a red line here that tells you it's weaker here. Let me take that back, it's getting weaker. And as you look through here in the longer term C wave here, right now it's above zero, as you can see here, but it's getting a little bit weaker. So as a contrarian, I would be buying a little bit at this point here. As you look through here, what John Carter from TTM Squeeze says is, if the bar, if the C wave is above zero, then you can buy. As you can see here in this scenario, C wave is above zero, which is 2.65, which is above zero. So there is a little bit bearish tint here. If this line is going solid blue and going higher, then there is a complete bullish sign here. Right now the bar is dark blue. That tells you it's bearish, and the bars are decreasing in size. That tells you it's bearish. So what I would do in these type of scenarios, I would put a small starter position here and then watch it and take it from there. And as you look through here, we got one more squeeze in the 3-day chart here. When that's happening, longer term C wave is above zero. That also tells you, hey, it can be a little bit bullish as we go forward. Then there's no more dots here. As you see here, longer term C wave is above zero in a monthly chart, barely, and it's also above zero in a weekly chart. That's why you can be a contrarian here, put on some position and buy some DVAX. Even though it's not completely coast is clear, but still it's okay to be a little bit early. So with that, let's jump into option chain here and look at DVAX. So as you can see here, we got DVAX, and as you see here, PC ratio is 0.446. That tells you there are more call option buyers than sellers. Let's go into 129 days out here. Stock is at very low price, as you can see here, just $13. And as you see here, 52-week high is $21. That's almost double, I would say. So what you could do here is keep watching the option chain here. Stock is at $13. Keep watching Delta 70 here. This is good enough for us. Delta 73. You could buy this right here, and you will pay around $4.20 to buy this call option and confirm and send. As you see here, you're paying $420. That's your max loss. Also, as the stocks goes higher, for every dollar move in stocks, you'll make 73 cents here. That's why delta is 73 here. So you could confirm and send. This is one way to do. The break-even price for this is 15.20. That tells you stock has to move by about $2 from these levels for you to break even. So this is one way to do it. Other way to do is to really buy a spread here. So spread, you're taking a little lesser risk here because you're buying one and selling other. So stock is at $13. You could probably do maybe say um, you could do 10-20 if you want. That's one way to play. Or you could even do 10-15. That's even a little bit safer way. Given stock is a low price stock, you could do a 10 and 15, which is a $5 wide spread. So I would go here in that scenario and do a spread purchase here, vertical spread. I would buy 10 and sell 15, as you can see here. So the moment you do that, you're paying $2.35, as you can see here, and it's a $5 wide spread, 10 and 15, $5 spread. So you're doubling your money. So you pay $2.35, remaining portion of $5, which is around $5 and $2.65 or so. That's your profit potential. So with that, let's confirm and send here. You're paying 235 to make 265. That's a nice risk reward ratio here, and your break even price, as you can see here, is below the current stock price. Very conservative strategy. You could do something like this. As the stock, if the stock stays above this price here, you'll make money. Most people love spread because your risk becomes a little bit mitigated because you're buying one and selling other. So thereby, you'll end up paying less money. As you can see here, your max loss is 235, and your break even point also came down here below the current stock price. So that's a good way to do it. And let's look at few more stocks here. As you look through here, keep watching. So look, Camping World is a good one here. Stock is already starting to go higher, so I think it's a good one to buy at these levels here. Let's go back to our chart here to Thinkorswim platform and look at Camping World. So I would start with probably this chart here and say CWH. All right. So as you can see here, this stock has been nicely oscillating up and down, up and down. Right now, it wants to go higher after a couple of days of drop here. And look, RSI is starting to stabilize here. That tells you momentum is coming back to the stock here. And IV percentile is a little bit increasing as stock market a little bit jittery right now, but still low. IV rank is just 25. And as you look through here, right now there is a bearish crossover. Red line wants to cross over the blue line. As you can see here, that's a bearish crossover when it comes to DMI. But there is a nice green candle at the bottom in the last candle here. That tells you momentum is turning around a little bit. Nice on the balance volume. Nice. There are more folks buying than selling. That's why it's trending higher. On the other hand, check-in money flow is telling you money is going out of the stocks right now, which typically happens when the stock drops like this. So with that, let's look at the TTM Squeeze chart here and see what we see. As you can see here, there's a red dot indicates there is a tight compression of volatility. Bollinger Band is inside curtain channel right now. When that happens, keep watching here. Long-term C wave, it's clearly above zero. It's nicely above zero at this time, so you could buy some Camping World. As you can scan through here, we also have red dots in a 3-day chart. When that happens, longer term C wave is above zero, as you can see here. And we got dot in weekly chart also, and we got C wave above zero. Coast is clear. And we got a dot in the monthly chart. Wow, it's got multiple squeeze going on here. When that happens, we got longer term C wave above zero. So what this tells you is, for Camping World here, coast is clear. You could either buy the stock outright given it's a low price stock here, or buy some option. So let's look at buying options here and go from there. All right, Camping World, as you can see here, $41 stock, all-time high is 49, and looks like PC ratio is 3.15. That tells you there are more put options traded than call options. So that tells you at this time, folks are hedging and buying put options. They think there may be some downside. As a contrarian, you could put some call option here and really take advantage here. When this happens, typically that means there may be even short sellers buying some put. Sometimes these shorts get squeezed. They will end up covering their shorts. That's when stock goes higher in a short squeeze. So with that, you could go 102 days out here, and you could buy a delta 70 call option here. Delta 71 is good. You could pay $8 and buy this call option. Every dollar the stock goes higher or lower, the option goes higher or lower by 71 cents as of now. So with that, if you confirm and send here, as you see here, we are paying $800 here, and break-even point is 44, which is just a couple dollars above the current stock price. Your max loss is 800, so your break-even is 44. This is one way to play if you're bullish on this stock here. Other way to play is to buy a spread here. Many folks like the idea of spread. Stock being at 41 here, you could do say 35-45 spread here. Looks like there is no 35, so you could I'm trying to see what the best. Okay, 36 is there. You could do 36 and probably 48 spread. You could buy this spread here and go from there. Oh, you know what? We have 35-45 spread. Let's do a 35-45 spread and take it from there. So as you scan through here, vertical spread, we have 35 we are buying, and 45 we are selling here. So as you can see here, it's a $10 wide spread. You are paying $5. Remaining $5 from this spread is your profit potential. It's a nice double your money proposition here. So with that, it's a let's confirm and send here. So you are paying $500 to make 500. Your break-even point is below current stock price. That's a conservative strategy. You could confirm and send this. As the stock if the stock stays above $40 by 18th of March, you'll make money. There's a good chance of this happening. I would confirm and send this and take it from there. We'll probably look at one more and wrap it up. So let's go back here. So as you scan through here, you got a few more. Look, we got a few stocks that are going higher. Look, we got CIG Energy, very low price stock. We could look at this one here and maybe wrap it up from there onwards. So CIG Energy here, very low price stock, just $2 as you can see here. As you look through the chart here, CIG Energy stock is trying to go higher in the near term. Right now, as you see here, red line wants to come down, blue line wants to go higher. It might cause a bullish crossover soon. Volume is going higher. There are more buyers than sellers. That's why on the balance volume is ticking higher, and check-in money flow is a little bit stable. There is nothing to worry about here. With that, let's go into TTM Squeeze chart here. As you see here, we got a squeeze in a weekly chart here. When that happens right now, we got a C wave below zero, but if you look at the wave itself, it's trying to go higher. As you can see, slowly but right now it's below zero. We got a squeeze in the monthly chart also. At the time C wave is below zero. So in this case, according to John Carter, don't buy because C wave is below zero. But you could look at the shape of the wave here and try to see if it's a good buy. But I would probably stay away of this one, given I don't see a nice waving up here. It's kind of flat on the below the C, below the zero line here. So I would stay out of this and take it from there. So with that, thank you very much. Happy investing and trading. Please subscribe.